Thank you, Karina. Thank you, Karina. Thank you, Karina. I would now like to invite Andrew Hall, the Chief Executive Officer of EmCee Consultants, to introduce our guest speaker, Peter Coleman. Thank you, Andrew.
Thank you, Janenie, and good afternoon, everyone. It's my pleasure to introduce the Chairman of Allkem Limited, Mr. Peter Coleman. Peter has over 39 years' experience in the upstream energy industry, spanning the Americas, Asia, Australia, and Africa. He was previously Chief Executive Officer and Managing Director of Woodside Energy Limited, Australia's largest oil and gas producer, between 2011 and 2021. Prior to that, he held executive roles in ExxonMobil Corporation. Born in rural Victoria, Peter graduated with a Bachelor of Engineering from Monash University and a Master of Business Administration from Deakin University. He is a Fellow of the Australian Academy of Science, Technology and Engineering, a member of the Australian Institute of Company Directors and the NACD. He is a member of the Monash University Industry Advisory Council and the Singapore International Advisory Panel on Energy. Peter is also Chairman of the Australia-Korea Foundation for the Australian Federal Government and an advisor to the Asian Society. He was previously a Director of the Business Council of Australia, Vice President of the Australia-Japan Cooperation Council, a Commissioner of Football in Western Australia, and a board member of the Independent Petroleum Association of America. Peter has been awarded a Doctors of Law from Monash University, a Doctorate of Engineering from Curtin University, the honorary title of Adjunct Professor in Corporate Strategy from the University of Western Australia, and an Alumni Lifetime Achievement Award from Monash University. Members and guests, please welcome Peter Coleman back to the Melbourne Mining Club.
Thank you, Peter, for joining us here at this Christmas Melbourne Mining Club function. I'm going to start with Allkem, your latest and greatest position, I like to think. Allkem is a lithium chemicals company, predominantly selling EV batteries into the manufacturing space. Can you give us a bit of a description around Allkem and how it differs from your peers on the ASX, and maybe use that to talk a little bit about the merger with Livent?
Look, firstly, thanks everybody for coming today, and I apologise for that big long introduction. It kind of happens as you get older that the introductions get longer. But I think Allkem is at an interesting point in a very interesting sector. With respect to what we offer in the marketplace, we do differentiate, and we differentiate both on geography and on the technology that we offer. But if you sit back and think about the sector, I've come from a sector that's been around for a long time that grows at about 1% per year. Allkem in the lithium sector, we're talking about multiples of growth. So, we're looking at growth between now and 2030 of anywhere between 3 to 10 times. So people ask me a lot, are you comfortable investing in the sector? And I said, well, look, if you can invest in something where the growth is really 3 to 10 times on demand, surely we can find a landing point in there that makes sense for us. The key, though, is, it's the old thing, it's about allocation of capital, where you want to be and so forth. And Allkem's in a very, very fortunate position. It has world-class assets in friendly jurisdictions, and it's got competencies that go with that. And those competencies are differentiating because they're the same and they're different. We have hard rock competencies, and of course we've got competencies in brine. And the difference there is, out of hard rock, you end up with a intermediate product unless you get into conversion. In brine, you end up with a finished product that goes into the market. So we've got a company that's got kind of different ways of thinking about that. And of course, we do it in remote areas. And so, the Puna in Argentina is about as remote as you can get. And it's at 4,000 litres, so, the chemical engineers in the room would be doing the physics on that and realising that the boiling point of things is a lot different at 4,000 litres and things operate differently and so forth. But we end up with a finished product that we sell directly into the market. So it means it's a fascinating company from that point of view, and it's at a great point in the industry at the moment because we've got strong revenues and, very important, we've got a strong balance sheet.
And was that the reason that you looked to this merger with Livent? What is it that's adding two and two together there?
Yeah, look, the Livent merger was simply around a strategy of saying, well, what do we want to be? Where is the industry? And at the moment, the industry is still quite nascent. It's very, very early in its development. And if you look at it, it's populated by, a lot of players who are just starting up. And of course, hard rock allows that, but also, the lithium guys struggle, the brine guys struggle a little bit more because the chemistry is a little harder to get it right. But certainly in the hard rock side, in the spodumene side, you can get it to market a lot quicker, and it's within the wheelhouse of what a lot of companies already know how to do in WA. If you go up to the brine in Argentina, it's a little harder and it takes a little longer. But if you have a look at where the sector is at the moment, it's a sector that's full of companies that are kind of just getting there. And as we looked at the Livent merger, we said, well, who's the largest company in the sector? And it was one of our competitors, Albemarle, at that time, 24 billion of market cap today, and these are US dollars. Today they're down to about 14 billion market cap. So if you think about a sector that's trying to grow and is going to be such a large part of the energy transition, and the biggest single player in it that's traded in the Western world is only $14 billion market cap, you've got to think there's a big opportunity there at some point. And so we thought the Livent merger integrates the company. It allows us to go through all of the value stream up to the point of the cathode, and there's a technology break once you become a cathode manufacturer. And so we're able to follow that, but also get access to a differentiation in the product stream, so different products coming out the back end, a competent organisation who'd already been around a long time, knows how to operate chemical plants, access to customers that we didn't have. And so you kind of look at all those things and say, this makes sense to put it together. And we want to be the offering that those original equipment manufacturers or car manufacturers, we want to be the ones that they must talk to in the marketplace.
And I guess that's the key point. The fact that you're actually producing a battery-grade product directly from your mine, you do get to talk directly to those customers. And I imagine that gives you a really big insight into how things are working in that industry. So perhaps for the audience and myself as an investor, what's your view about the lithium price in the maybe next 6 to 12 months?
Yeah, I knew that'd be a question. So it's a great day because lithium prices bounced overnight. So you always want to be here on the day that lithium bounced. But just back to your first point, yes, we do get an insight into the customer. We're very fortunate that our largest investor and also joint venture partner and off-taker is Toyota Tsusho. So if you think about it, Toyota manufactures the majority of cars in the world, and then through their trading arm, Toyota Tsusho, we've got a relationship. And so, yes, we do understand that and are able to get a little further into it. With respect to where prices are, of course, again, you've seen a price collapse this year, but it's probably not a collapse. I'd say we probably overran at the end of last year. And that was driven by a couple of things. It was kind of post-COVID, supply chains were still getting themselves up and running. You had China was stimulating the marketplace. And of course, you didn't have new production coming on. And of course, this year, you've got new production coming on. You've got production out of Africa that wasn't there before. And of course, that's natural, and many in the room have been there. It's kind of, you get a price signal in the market and everybody runs off to the bank and their investors and says, it's time to build the mine. And that's what's happened. And of course, that price signal was a couple of years ago. And so it will work its way out of the market, but we're going to be in it for a little while.
Of course, I do remember investing twice in lithium when it was at $350 a tonne spodumene. So yes, it's come off a long way, but it's certainly not there.
No.
Again, continuing that theme of how Allkem is different, Olaroz is one of your core assets, and it's got an extremely long mine life, which is kind of unusual in the normal course of events for mining companies. Can you perhaps talk about how the fact that you've got that really long generational asset and how that impacts your thinking about ESG, and perhaps also add in there what you're doing around carbon emissions, particularly for Allkem?
Look, it's a good question. So, as we know, if we're talking about hard rock, we're typically talking about a mine life for 15 years plus in the hard rock world, and that's, as we look at it, we look at our James Bay asset in Canada. We've extended that and will be a bit more, but it's in kind of that sort of time frame, 15, 20, 25 years. When you go up into, the areas of the solar zones, I should say, and you start to look at the life that you've got up there, you're talking potentially 100 years. And so you're talking intergenerational with respect to your relationships with communities and so forth. And you're talking about interfacing with Indigenous communities. And so it's a very remote part of the world. And so when we go up there, you've got the normal challenges around finding an educated workforce, understanding of safety systems and so forth. And so we've had to get into those communities. We've had to help them develop their education. In fact, our sustainability report that we've just put out shows how well we've been doing at getting people who've just finished the basic secondary school education into our workforce. And we're up at about 75% now. But just a few years ago, that was as low as 25%. So, companies can make a difference, but you've got to put your mind to it. And often where government, it doesn't have the impact, companies can have the impact. And so it's about working with people and incentivising them and making sure that they're proud of who they're working for and what they're doing.
No, that's really great, and we'll be talking a little bit more about education and one of my questions. Now, you're the chair of Allkem, but in one of your previous roles, you were the CEO of Woodside. So I'm going to change the topic a little bit and say you've now sat in 2 seats. Can you talk to the audience a little bit about what are the differences in those 2 roles, and perhaps what it was that you learned as a CEO that has perhaps guided your principles now as the chairperson of Allkem?
Well, the fundamental difference is you get some free time. So if you think about it, as a CEO, you're just singularly focused on what it is you've set out to achieve. The advantage as a chair, be able to sit back from it and be able to really think about the business in a different way. You also need to employ a different set of skill sets that you've maybe talked about using before as a CEO, but the way the business works is a bit different. So you've got to influence more than do. And so you've got to think about how do you influence, how do you coach, how do you mentor, how do you set expectations and make that clear within the organisation. Because at the end of the day, you can't do it, the organisation has to do it. 2, you're probably not the subject matter expert in a particular area. So again, you've got to understand organisations differently. And then boards, of course, you have to develop a board as a team. We've often talked about the role of boards, and I know it's an open conversation in Australia and will be for some period of time. Particularly the difference now is we're merging with a US-based company, and how do we kind of mesh the expectations of governance in a US context versus an Australian context? How do we work with our shareholders and so forth? These are all open conversations at the moment.
And you will be maintaining your ASX listing as the merged entity, is that right?
Yeah, look, the poor old ASX gets maligned sometimes, but this actually is a real plus for the ASX, and that there is a share type instrument that actually sits behind investors here. It's called a CDI, a CHESS depository instrument, but it looks like a share. So it has all the same rights as a share. There's some legal differences, but it allows a company like us to offer both to Australian shareholders shares, things that look like a share here, and it gives them those same rights, as well as, of course, the US shareholders, they can be on the New York Stock Exchange. So it gives us access to both of those worlds. The reverse is not true. So if we were a US company coming to Australia, of course the US investors would get ADRs in the US and they're not as attractive to those investors. So there's a plus there for us.
Interesting, because it is very unusual to have a merger of this kind on the ASX. So it's perhaps
it's probably, yeah, it is unusual. I mean, we can go back and there's a couple. Amcor's probably the most notable back in 2019. But yeah, it's not usual. Cross-border mergers are not usual. And then cross-border mergers where you're being taken over, which is the way the accounting rules are going to work, or the listing rules, are a lot of work for the board, because basically everything has to change. You have to move all of your books across. So yeah, look, it's a lot of work, but at the end of the day, we think it's really going to be worthwhile. And whilst there's concerns at the moment with Australian investors around disclosure requirements in the US are different. We need to recognise that, and we need to make sure that we have best practice, world best practice in disclosure.
And at the end of the day, you're working on building a business which is going to be quite meaningful. I think you'll be the third largest in the space when the merger proceeds, and obviously it's, as you mentioned earlier, an immature industry. It's just starting to grow, hence the big growth opportunity. And so there is a good reason why going through all of that difficulty to get to that end point.
Yeah, look, it does. It helps us jump. You know, as we look at it, we said, look, the strategy is we want to build into the downstream. We want to get predictability of revenue. We want to make sure that we can move through the cycle and make sure if it's, you know, we're making less in one area of the business and we're making more in the other, and they kind of balance each other. And we have access to those customers. But to do that, you have to be material. You know, once the merger goes through and, you know, we've built out a couple of our projects, we'll be number 3 in the world on production, but number 2 in the world on reserves. And the important part about that is the competition around us, only one of them is really Western world traded, and that being Albemarle. So the rest are Chinese or SQM. So, you know, as you look at it, for an investor, we also say we're in friendly countries. You know, we're in Canada, Argentina, Australia from the upstream resource point of view. Our manufacturing facilities in North America, Europe, based a little bit in China under contract. So we look at it and we say, this is as you think about the criticality of what we're doing and the product that we're producing to the Western world, this is going to be a very friendly company with respect to investors in being able to understand both the risks but also the places in which we operate.
Interesting. Now I'm going to change tack a little bit here, because you are in a unique position, having worked in a petroleum industry. I was really interested to hear your views around the actual entrance of petroleum companies into the lithium space. And do you think it's complementary to their existing business, or do you think this is actually a strategic tilt?
Yeah, it's a really good question. Of course, the question is about ExxonMobil making their announcement that they're getting into lithium. It's natural. It's natural for them. People often think about ExxonMobil as an oil and gas producer. The reality is they're the 3rd largest chemicals company in the world. So the end product they know very well, and of course the production of brine they know very well. So matching all of that together is quite sensible for them. The challenge, of course, will be scale and what that looks like. But ExxonMobil has a long history. ExxonMobil invented the lithium battery, right? So we're often going to put these blinkers on and think oil and gas companies, they just do oil and gas. No, they invented the lithium battery. At one point, they were very large coal miners. They've been into gold, they've been into uranium, and all, you know, I shut down their last coal mine in the US, or sold it, for example. So there's skill sets in the company that the company keeps. Companies like that keep these skill sets there. So I think the next challenge for them will be scale. How do, you know, once they prove it up, how do they then get scale in the marketplace? As a off-taker or a purchaser of product, you've got to be pretty happy about it, to be quite frank. So, you know, it's both a threat and an opportunity for us, because I think it validates the sector. And so if you look at it, because they don't get in there and dip their toe in the water. You know, if they're going to make an investment, they're doing it because they're serious about the investment. not because somebody complained at them that they're not doing things. They're a very serious, very diligent, very deliberate investor. So we look at it and say, if you're an off-taker, you're an OEM and so forth, now I've got confidence, but it also that I've got somebody who's going to of scale. It also validates why we're merging with Livent, because we're making the same offering. The difference is we're about 10 years ahead of them with respect to access to the resources and so forth and so on, but they'll catch up quickly.
First mover advantage, I like it.
They do.
I mean, and on that context, when you were the CEO of Woodside, you might not be able to tell me this, but did Woodside ever consider moving into the lithium space in your time?
Look, I don't talk about Woodside generally, although Hugh was asking me about the dividend and whether they'd be any good. Again, I can't comment on that either anymore. The short answer to that is no. And look, I don't know what they're doing now, and I wouldn't want to hypothesise on it. I was always a firm believer in understand what you're good at and be very, very good at that, and then look at things that are complementary. So if you're going to step out, take things that are complementary and move your way out. Woodside's not a chemicals company, and so that's a skill set that they don't have. They're off looking at hydrogen and so forth, and that fits their wheelhouse much better.
Now, I was on a site visit in Western Australia last week, and one of the key things that came up consistently talking to the miners there was around productivity related to a skills shortage. So one of the questions that I have is, what are your thoughts around the mining industry and what else it could be doing potentially to collaborate, say, with universities to fill that skills gap? Have you got any ideas about how they could proceed with that?
Look, this is a really hard one because, as you know, employers and industry groups, they're typically very reluctant to go out and make commitments too far out ahead of themselves. And the mining industry is really driven by, in WA in particular, it's driven by 4 or 5 big players. They're the major employers, and then you've got lots of smaller companies in there that probably employ equally the same number of people, but on a per company basis, obviously. They're probably taking mature hires out of the market rather than graduates out of university. I think the key for companies is to make mining a choice, make mining something that people want to go into, and they're doing a lot of work on that, making it more work-friendly, making it a place that's exciting to work with and so forth. Using technology, they're right into robotics, artificial intelligence, all of the things now that students are looking for. It's not just simply digging it up and putting it on a ship anymore. Mining companies are far more sophisticated in that regard. So it's about bringing that package together. Now, how can they work with the universities? It's about communicating that to the student group. So that and it's not just the students who are in university, because at some point they're already a captive audience because they've already chosen to be an engineer or chosen to finance or so forth. It's about getting the kids in secondary school to make those choices, particularly in the STEM type subjects. And so that's where I think industry really needs to be working. It needs to be working at the feeder part of that, which is the secondary school part of it. The universities then polish them up and then they come out at the back end of that, and of course they'll make their choice.
That's a really interesting insight going into high school. That might have to talk to you about that after this interview. I want to change tack a little bit now, because I know you're a St Kilda supporter, and obviously we're in the capital of AFL football here in Melbourne, and you were also an AFL commissioner. So perhaps you could talk to us a little bit about your insights about the differences or similarities between the football industry and the mining industry.
Look, there's lots of similarities, and I was just explaining to somebody, you need to understand you're in Melbourne, so there's religion and there's football, all right? And you can argue between the two. You go to football on Saturday and you go off somewhere else on Sunday. Ross Lyon is part of our guests today, and Ross and I go back to when he first came to WA, and of course it was an interesting situation because Ross was coaching at the Saints, and I'm not a supporter, I'm a barracker. So there's a different level of emotional attachment to that. When you're a barracker, you're hardcore, and it's not going to change. And so I happened to be on a plane flying back into Perth, and the coup was underway, and my head of corporate affairs was an avid Fremantle supporter. In fact, he wore purple, everything was purple. And he couldn't help himself, so they had the press conference in the Woodside offices, because that was the only place that we actually had all of the press gear set up. And of course, Ross is there, and they're all sitting there, and we've got Woodside in the background, right? Well, you can imagine the phone calls I got from the St Kilda Football Club after that. It was like, did you really do this to us, and so forth and so on. And the answer was no. So I want to get that on the public record. No, it was no. But I must say I'm really pleased that Ross is back at the Saints. But the relationship and what we can learn from football, as I describe football, rightly or wrongly, as 100 minutes of structured chaos with crises in between. And we can learn from each other, because the way footballers play, or elite sports people play these days, many of us grew up playing football and we were allocated a position on Thursday night, and you played that position. And you probably didn't move much more than 30 metres either side in that position. Today's game's completely different. They play in patterns. And it's about organisation, and lots of things it's subconscious. They don't have enough time to think about it. And so for us, it was about getting an organisation to become agile, to stop thinking about reporting lines and lines on a page because people want to know this is what I do. It's to stop thinking about job descriptions, about inputs. It's about outputs. It's taking job descriptions and getting them down to 5 points. This is the outputs that we're going to achieve. It's about getting teams to getting away from reporting lines and to thinking about patterns. And it's about organisations moving so that they can start to take subconscious decisions that just become normal to them, and you can do it quickly. And so that's what we can learn from elite sport and as businesses. And of course, what was Ross's takeaway was crisis management. So, what do hydrocarbon companies or companies who produce hazardous materials do? They do crisis management really well. And they practice it, and they practice it, and they practice it. So, Ross was very generous with his team. His coaches that would come in, they'd work with my leadership team, vice versa. They'd go to the emergency response room. And it's all about managing information and data. And so if you think about it in the context of a game, or you think about it in the context of a crisis, it's about getting all of the right information in front of you so the decision makers can make consistently good choices. So, we often think the two are different and wonder why. Actually, the overlap is very, very similar. And it's about choosing the right people with the right skills for the right job, letting them know what their objectives are, and then they go execute, and they go play.
I think that's a really good insight, Peter. I think that's the end of my formal questions, and I think we can throw it open to the floor and see what the floor has to ask. Where are our... There we go. There's a microphone over there. Oh, I think Sam's got someone. Please say your name and your organisation when you ask a question.
Hello, my name is Marco Carlet. I'm the Managing Director of SW International. You mentioned that China has clearly got significant influence of the price of lithium. Do you perceive that to change in the future? And if so, what policies do you have in place in order to mitigate any potential exposure there?
Sorry, can you repeat that question? I couldn't quite understand.
Once again, you mentioned that China has quite a bit of influence over the price of lithium. And do you perceive that to continue in the future? And in the event, and the hypothetical is that they decided to change their approach and policies, and there was a void from their perspective, what policies or how would you manage that lack of interest from China?
So, look, the answer to the question, China controls the end market at the moment. So roughly 80% of raw product that's produced in the world goes through China for conversion into either a lithium carbonate or a lithium hydroxide, either battery grade or technical grade. So you've got differences there. But basically, China controls the market and will do so for some period of time. And what we're seeing now is China's working out that not only do they control what we call the conversion market, they're now investing in the upstream in parts of the world that they can invest. So they can't invest in most of the Western world at the moment. Canada's just stopped 3 companies here in the last month from investing in critical minerals there. So they're off in places like Africa and so forth now, stimulating supply out of alternate regions. And that's a sensible thing for them to do, to be quite frank, because they're seeing signals from the West that maybe supply from the West at some point may drop off as well, so they've got to go and have alternate supply. So they're going to dominate the market for a while. The issue there is price transparency. It's very difficult to get price discovery through the Chinese market, and there's really not an index that you can go through and say that's really a transparent index. It's simply because, you know, some of the product or the raw product, the intermediate product, is actually sold on the last ton that goes. The price you see is the last ton that goes in the vessel, not the average price of the vessel. So there's some numbers here that you just have to understand as you work through it. Now, what's the West going to do about it? Look, I honestly, I don't know, and the answer is probably not a lot, because you've got to be careful. Once you start targeting a particular sector and giving it protection and so forth and so on, then the Chinese have the ability to respond in other sectors. And so trade's very broad, so you have to be very careful when you start doing things. So the best way for the West is to stimulate their own supply into their own markets. And that's kind of happening through the Inflation Reduction Act in the US, and you're seeing a lot of companies there. You're seeing in Canada a lot of explorers going into Canada at the moment looking for hard rock. So, and the reason for that, one, you can develop, it's an OECD country, and it's right next to market. So it's right next to where the vehicle manufacturers are. So you are seeing that shift, or that pivot already happening. What we haven't seen yet is battery factories at giga scale coming through, but they will come. And battery factories are enormous things, all right? You measure a battery factory in hundreds of meters long. The Panasonic factory in Japan is the largest single building in Japan. I think it's about 285 meters long by 230 meters wide by 70 meters high, and it is all dust-free. So if you can imagine, just, you know, I know the air conditioning guys in here just thinking through that. These are enormous things, very, very complex process, enormous factories. So I think what the West is going to do is going to stimulate supply, and you're seeing that in the US, a lot of brine opportunities around direct lithium extraction and so forth. So I think it'll have to be managed. Now, what are we doing? Of course, the reason we're merging with Livent is we're kind of in those friendly countries, so to speak. So we're in, as we think about where our supply comes from, it's coming from countries that are in that kind of friendly group, and then where the manufacturing is, of course, it's in friendly jurisdictions as well.
Our next question is just from here.
Finlay Cousins. I'm a student engineer at Monash University and the president of the AusIMM Melbourne student chapter. Sorry. You mentioned the need to reach secondary school age students, and we also have a situation where universities around the country are axing mining-related degrees such as mining and metallurgical engineering. What can industry actually do to support these education providers to ensure that the necessary students and future workforce are moving up into the industry?
Yeah, look, so the question as I heard is, what can we really do to help students and stimulate them coming into the industry? I think there's a couple of things. One is the industry can help itself. So there's a little bit of demonising going on at the moment in the mining industry, that particularly on our Scope 1 and Scope 2 emissions and some of the environmental impact, that we could be better as an industry. And I think, you know, you'll always be able to take that criticism and criticise an industry, particularly in an extraction industry. But in general, we need to listen to that. And yes, we can improve our game across the board, and we can all point to examples where we can improve our game. And of course, in these things, the conversation always goes down to the lowest common denominator. So what we've got to do is we've got to lift everybody up together. And as an industry, that's about sharing and making sure that we share what best practices look like. So that's really a social license to operate things. And then what we need to be doing then is going out and working and providing opportunities for students to come into our workplaces and actually see what we do. And, you know, we've got away from the good, you know, there was a time where we used to have school groups come to our sites, you know, and kids be on our sites. But now, you know, for health and safety reasons, we decide that's too hard. Well, it's not too hard. I mean, we've just had the school kids from all the local communities around our site at Mount Catlin down at Roebourne into our facility as part of our community outreach programs. Well, you can imagine for a teacher in those schools, it's a gift. You know, they've got something to work through their curriculum on. The kids come, they're fascinated, they see things. And, you know, there's our engineers, our accountants and so forth of the future coming through the gate, and they get that feeling for what we're doing then. They go home and they talk to their parents and others and so forth. So it's about understanding that it's not just grabbing the guys at the end of after they've finished their degree and so forth, is that you've got to get back and start doing these grassroots things and making sure that you are part of the community again. Now, I think to be honest, I think we've outsourced that to our communities relations teams. We've outsourced that to corporate affairs. And I think we need, as leaders, to take control of that again and basically say, no, it's me as a leader. I'm the one who's going to get out there and I'm going to lead this, and we don't outsource it anymore. You know, this is something that's got to be really important to us. So I think that's where it works, and that's where it's been working for Allkem, and we're doing very well.
Thank you, Peter. There's another question in the middle of the room.
Dave Clark from GHD and also the AusIMM. Well done, Peter. Really rich discussion. Well done to both of you, actually. Just wanted to pick up the thread of a couple of things you've touched on, particularly around ESG drivers. Curious from your perspective, in terms as chair, what's top of mind for yourself or the board or the organisation around things such as energy in terms of decarbonisation efforts, water, particularly given the nature of the business, and perhaps just picking up on that previous question around the people side of things internally around talent, attraction and retention in terms of skills. Where might those types of things rate in terms of what's top of mind? Thank you.
Well, I think what you really mentioned are things that really touch all of us. So as we think about the organisations we want to work for, the work that we want to do and contribute during our lives, you know, those areas around air, water, impact on communities and so forth and so on, they're all things that are core to all of us. And so we all want to work for an organisation that has those as just simply as part of their core principles in what we're doing. So as we think about Allkem, we think through all of those issues. You know, what are we doing with our water and how can we manage it better? What are we doing with our energy and how can we reduce it or make it renewable? And so forth. So you go through all of that. But again, it needs to be something that's core rather than it's an add-on. All right? So if it becomes core, then it's easy to do, and it gets into the mine plan, it gets into the development plans, and it just becomes natural for us to do it, rather than, again, sitting it out in a group and it's like, guys, you take care of this stuff, but the important stuff is here. No, the two, I think the world's telling us the two have to be matched together. So, you know, it's easier said than done, but if you work on it and work on it and work on it and work on it, it just becomes natural. in the organisation. These become natural conversations and they get built in from day one, so you're not actually fighting them at all. So again, I think each company's got to look at its own journey. Often people will say, well, it's too expensive to do that, I can't afford to do it, and so forth and so on. Look, I'll give you a really good example. At our Mount Catlin mine, you know, it's an end-of-life mine, but we had attrition last year at over 65%. And why is that? Is, well, we weren't providing a workplace that people really wanted to be in. And you looked at it and, you know, we had guys staying at the pub in town, we had this, that, and the other thing. We weren't really telling the workforce that we cared about them. Now, they were a contract workforce, so they were more mobile anyway, and we just had an end-of-life mine operator view on it. Now, of course, what happens with that is then your safety performance is terrible, your productivity is terrible, and your costs start to get out of control because you've got all this turnover in your business. So we changed that. We said, no. One standard across all of our businesses. What do we need to do? And we started making some changes in the business, and we're in the middle of building some permanent accommodation for the crews coming in. That's gone down, that attrition's gone down, it's already halved. And so if you think about it, there are productivity impacts on these choices that we make as well. And it's about people need to feel welcome, they need to feel safe, they need to feel valued in what they're doing.
Thank you. We have one final question.
G'day, Peter. Simon Sharrock here, Managing Director of a company called Wells. Thank you for your time today. It's a great presentation. Two quick questions, if I may. The first one is around the evolution of battery technology and other competing technologies. Do you foresee that things like hydrogen might surpass or supersede that in the not too distant future? One, in terms of EVs and transport and so forth. Second question is, what's your feeling around further downstream value adding and manufacturing here in Australia rather than shipping off the raw material to places like China to manufacture these essential components? Thank you.
Sorry, I missed the first part of the question.
It was around hydrogen, other technologies in terms of power, superseding potentially battery technology as things exponentially evolve in terms of our understanding.
Good. Well, that's a really good question because in my spare time I chair two hydrogen companies. So the issue here is it's the classic in the energy solution is we need all types of energy sources coming in. And that's what we often forget in the debate today is, you know, our current energy needs are made up of many, many different types of energy coming into the system. As a consumer, we often don't think about it. We just turn the light on and we don't know where the power came from. But you've got a mix of energy sources coming in. The future is going to be the same. So I'm not going to sit here and say and try and pick a winner between different battery technologies. You'll find each battery technology has its own niche as to where it fits into the marketplace. There's a lot of discussion around sodium ion. Yes, they're good for big battery storage. You're not going to put a sodium ion battery in your car. There are different types of lithium batteries now coming in with varying degrees of cobalt, because cobalt's becoming an issue from a social point of view, as 90% of the cobalt comes out of the DRC. And so people are now working on that technology to reduce the amount of cobalt that's in a lithium battery. So these are just natural evolutions. Now, with respect to, you know, the crossover between hydrogen and a battery, it just simply comes down to weight and what you want to do. So, you know, at the end of the day, a lithium battery in a 71-ton truck takes up about a third of the available weight that you can put in a truck, right? So that doesn't make sense. That's going to be a hydrogen solution, and it's likely to be a liquid hydrogen solution, even though gaseous hydrogen standards are starting to increase the pressure and increase the range. So there's a crossover there. And it's probably, as you get into the heavy vehicle market, is a definite crossover where hydrogen becomes more attractive than lithium. But the lithium market is huge. So if you think about the motor vehicle market itself, it's huge. You think about what Toyota's trying to do. Toyota's moving from 50,000 electric vehicles last year to a target of 3 million vehicles per year by 2030. We're the major supplier to Toyota. So for us, you can see there's a market built in there. So what I would say is plenty of running room. There's lots of noise out there because everybody wants to pitch their technology as a winner. The reality is there's lots of space for many winners in this one, and we don't need to sign up. I think you need to look at your end use for it and decide what you want to do. Now, second question is, can we move into manufacturing in Australia? Probably not without a lot of government assistance in doing that, and so it's really going to be up to government to determine just how important is it to have manufacturing in Australia. What does our supply chain look like, and so forth, and is government willing to underpin that industry, either with tariffs on product coming into Australia or subsidies in Australia itself. They're things that government will have to work through. With respect to the technology, we don't have the technology now. We'll have to buy in the technology, we'll have to learn how to use it and develop it. It's hard for me to see how far we would go down that chain. It's very hard for me to see us getting into battery manufacturing, given the complexity that I talked about, and given the fact that we've got transportation costs in there. So let's be fair, we're a limited market. Our entire market represents less than the middle class of Indonesia, for example.
Thank you, Peter.
It's very small. So, we've got to get reality as we would be putting lots of transport costs in. Where they're being manufactured at the moment is really where the world is growing. So it's hard for me to see that. It's not something that Allkem's looking at. So I give you an observation as an outsider, as distinct from one that we've studied in detail.
Thank you very much for that, Peter, and a fantastic conversation facilitated by Karina. I will just get you to stay in your seats and on the stage for a moment whilst I call on Chris Flynn, partner, White & Case, to deliver the vote of thanks. Thank you.
Thank you very much. Thank you very much, Janenie. It really is our pleasure at White & Case to support the Melbourne Mining Club, an organisation that makes such a great contribution to the mining industry and also, therefore, to the economy more broadly here in Melbourne and nationally. And it seems completely appropriate, really, to be able to listen to Peter, who has also made, as we heard earlier, such a great contribution and continues to make a great contribution in extractive industries and the mining industry as well. It's really been a fantastic discussion this afternoon. Thank you so much. We've heard the discussion range through so many topics, ESG and supply chain, the interrelationship between the two and challenges, geopolitics, some of the labour challenges and cost challenges facing the industry, as well as emerging minerals and critical minerals, and the possibility and the likelihood of the hydrocarbon industry leaning into that and what that will do to the industry. So such a wide-ranging discussion, really fantastically curated. Thank you so much. So on that note, let me propose a vote of thanks firstly for Karina Bader from Acorn Capital for such a fantastic discussion here today. And also, lastly, and obviously certainly not least, to Peter himself for sharing his reflections and his experience with us today, not least of all on St Kilda and his time chairing, in football in Western Australia. So thank you very much. Thank you very much, Peter.
I'm told I need to learn what to use this for, so I promise by the next time I come back and visit, I'll know which way to hold it. But I think you do this with it, so well done. Thank you very much.